Solana is in an interesting spot right now. The price went from below $10 all the way to above 250, and that rally was fueled by meme coin trading, is what fueled by the pump.fun ecosystem. Now the question is, since the price now retraced, is this an opportunity to potentially buy low? Let's have a look at some on-chain metrics, some data most people are not considering. Now this is a chart everybody is looking at. It's Solana in US dollars, and there seems to be some kind of an invisible ceiling at around $260. But then there are other charts that are not as common. So this is the Solana dominance. How much of all of crypto is in Solana? As in, what's the market share if we just compare by market capitalization? And here we do see a slight trend upwards over the years. And if that invisible ceiling persists, there's upside potential for Solana of roughly 56%. So that's now relative to all other cryptocurrencies, right? That's not related to the US dollar amount. Of course, when Bitcoin goes up by 100% and Solana goes up by 100%, then this chart here doesn't change. But since specifically Bitcoin is doing very well recently, Solana relative to Bitcoin did not do that great. From the top in November of 2021 to the bottom in June of 2023, Solana underperformed Bitcoin by 87%. It appears as if we are again in a rather bearish cycle. Since March of 2024 to today, Solana has underperformed Bitcoin by 48%. And that's a problem, right? It's not great that over the cycles, Solana doesn't see higher highs because Solana is more risky than Bitcoin. If we don't get more performance long term, but we do take on more risk, that's worse in terms of risk-adjusted return, right? When we take on more risk, we need more performance. Now there's a direct competitor to Solana, and that's Ethereum. Ethereum was the very first smart contract platform, and it tended to lose market share because of the high gas fees, because now the Ethereum chain isn't used directly that much anymore. It's mainly the layer 2s, so Optimism, Arbitrum, etc., that are used for transacting. And so those higher gas fees deterred retail adoption. That's probably also why Donald Trump launched his meme coin on Solana, not on Ethereum. And Solana was at the time arguably more risky than Ethereum. And that additional risk did get paid off. So Solana from top to top outperformed ETH by 50%. But here's the problem. In the medium term trading range, we tend to be rather elevated. It would not be surprising to see Solana underperform Ethereum by 28%. And the reason why I think this is a likely scenario is because Ethereum is particularly depressed right now. This is a long-term chart of Ethereum's dominance. So how much of all of crypto is currently in ETH? And this chart starts in July of 2017. So this is roughly 8 years of data. The chart also tends to have somewhat of an invisible ceiling, around 21-22% roughly. But maybe we will also have a floor that aligns. So maybe we bottom out again at 7% dominance. At least in the last few days, Ethereum stopped underperforming the rest of crypto. So there's downside for Solana relative to Bitcoin, and Solana is on the higher end of its trading range versus ETH, and ETH is historically cheap right now. This massive 25x rally that we saw in Solana, right, from $10 to $250, that was fueled by meme coin trading. And then came the meme coin launchpad, pump.fun, that changed everything. Have a look at the trending tokens on the Solana chain ordered by their liquidity pool size. It's pretty much all just meme coins. The problem though is that meme coin trading is a zero-sum game. There's no value created. It's 100% player versus player. And it's not just random, right? There's a skill and a luck component, but the people that are insiders, the people that know a lot of on-chain analytics, they can buy those tokens earlier than the masses. And just because of that effect, we see over time how capital concentrates in just a few wallets. So the vast majority loses, a few people make multiple X returns. And that then explains why the pump.fun ecosystem has a problem growing. So here you've got the number of monthly transactions on decentralized exchanges on Solana. It tended to go sideways in the last 4 to 5 months. So pump.fun is in green, the rest is in black. And if you just look at pump.fun, that's going down since November of 2024. Here's the same data, but normalized to 100%. We can clearly see how there's less and less pump.fun transactions every month. The Solana transactions that are not meme coin launchpad related tend to take over more and more market share again. Or in other words, the pump.fun ecosystem bubble starts to burst. The main reason for this massive rally in the Solana price in the last months starts to disappear. But then of course we've got the long-term investors, right? Solana is not just short-term speculation. There are people that simply just buy SOL because they believe that Solana will continue to take more and more market share of Ethereum. And there's a good case to be made for that argument. But then if we are buying Solana long-term, it might make sense to stake the SOL, right? It might make sense to just put this away because then we can get additional return on the investment. In the end, Solana is a proof of stake protocol. Here's the number of SOL that gets staked over time. And this is going up. And this seems to be a good statistic, right? More and more supply getting locked away. And the price is a result of demand versus supply. When there's less supply, price should go up. But it's not that easy. This chart starts in August of 2021. And we got roughly 40 million SOL staked over time. Now, since August of 2021, the supply of Solana unfortunately grew much more than that, by 224 million. So while the staking program is great, it's not good enough to offset all of the additional Solana that enters the market every year. And the token inflation combined with the staking program that's not quick enough is probably the result why Solana doesn't hit new all-time highs relative to Bitcoin over time. What we've got over here is the number of new tokens created on Solana over time. This peaked in the middle of January of this year. Since then is going down. What's going down even faster is the number of traders on Solana. That peaked already at the end of October of last year and is coming down extremely quickly. We are now at 6 million. We used to be at 30 million. And again, I think this is no coincidence. This is just a reflection of how capital concentrates in the hands of a few winners. Crypto is not just a game of luck. It is a game of skill. And the skill can be on-chain analytics, or it can be just knowing the right people. If you're not part of the inner circle, you tend to lose. Now here's the number of traders for a particular decentralized exchange on Solana. And the number of trades is going down for every cohort. So it's going down for the very small wallets, but it's also going down for the very large wallets. There is surprisingly a recent uptick in the total value locked on the chain. So this went from 6 billion to now 8. And in the last month, the Solana chain saw most capital increase. But the question remains, how sustainable is that recovery? But in the end, we need new traders on Solana. And if the traders don't come, then the capital is likely going to exit at one point as well. Now, in October of 2023, the market flipped. The market turned from bear to bull. The market saw inflows from traditional finance. And we can see this in this chart. This is the stablecoin market cap. So it shows how many dollars in the fiat system are deposited somewhere with a custodian, say with Tether or with Circle, and what equivalent has been minted as stablecoins on chain. And from May of 2022 to October of 2023, we actually saw a contraction of the market. So money was flowing out of crypto. People were turning back to TradFi. People were withdrawing their money. But that then changed in October of 2023. Since then, we see more people depositing than withdrawing from the crypto ecosystem. And surprise, surprise, this is of course also an impact on crypto prices. When money is flowing in, crypto prices tend to go up. And that is what we see with this chart at the bottom. This is the Bitcoin price. So when money comes into the market, Bitcoin goes up, and that is with a leverage effect. So Bitcoin appreciated by 260% since the beginning of October, while the stablecoin market cap went up by only 85%. Now still, there is a lot of volatility. What causes a a price drop like this of 26% while there's actually money flowing into the system? The answer is swapping activity. So it's not just people depositing their money into the system and then wait and invest for the long term. Most people in crypto trade actively. And whenever people move from stablecoins to risk on assets like Bitcoin or altcoins, the prices go up and vice versa. So there's money flowing in and out, and there is swapping activity, people getting risk on and risk off. Now we can use that data because we can have a look at how much of the entire cryptocurrency market cap is currently in stablecoins. When most people have swapped into stablecoins, the stablecoin dominance, so the percent of all of crypto that's in stablecoins, that's pretty high. When a lot of people have deployed their stablecoins, then the stablecoin dominance is low and the crypto prices are high. So check this out. This is the stablecoin dominance, and this is much more volatile than the stablecoin market cap. And at the peak, 19% of all of cryptocurrency's market cap was just stablecoins. So that's when people are very much risk off. And that's then also when the Bitcoin price tends to be low. As stablecoins get deployed into risk on assets again, the Bitcoin price tends to go up. Now in the last 1.5 years, we tended to trade in a range. So that's between 9% stablecoin dominance to 5% stablecoin dominance. And if this is now coming back down again, as we have seen in the last few days, then crypto prices will go up. Let's work with the assumption that we see the exact same development of people deploying their stablecoins again as we saw in November of 2024. So let's overlay this. If we take this time frame and we look at the Bitcoin price development during that time, then we can overlay this to the price today. And we're getting to a potential upside of somewhere between $130,000 to maybe even $150,000 per BTC. And so this is, I think, the most likely scenario. I think most people have this backwards. There are too many comparisons made with traditional finance and the crypto ecosystem, as in when the money supply is going up or when the Federal Reserve is lowering interest rates, that's when money is loose and that's when crypto prices should go up. But I don't think the link is that strong. I think the link is much stronger for how much money is currently on the sidelines already within crypto. We know that the crypto ecosystem as a whole is expanding, right? The stablecoin market cap is going up, and that obviously matters. And at the same time, we also see that a lot of that stablecoin money is not yet deployed, but is ready to get deployed. And so if we work with that scenario, if we say, okay, a lot of that money might get deployed if times get a bit brighter, should we just go now and buy all kinds of random altcoins? I am not so sure, because here's the counter story to all of this. The Bitcoin dominance continues to go up. So as a fraction of all of crypto, Bitcoin becomes more and more important. Bitcoin tends to outperform most other assets. And we only saw an altcoin rally when Bitcoin dominance was close to 70%. So when only 30% of the cryptocurrency market cap was in the alts, that's when the alts were cheap enough to subsequently make a rally. And we are not yet there. So just building a portfolio of altcoins is probably not going to cut it just yet. Here is what I'm doing instead. I'm looking at what are other influencers and other heavyweights buying. So we track various important wallets and we see, for example, how the Pepecoin team or the Base AI team is accumulating the KEK token. And that's happening at a very small market cap, only 3.2 million. We got notifications for all of those purchases, and though the price just continues rising, we still need an edge in this market. We can't just buy any random altcoin, but the market is expanding. It does make sense to take some risk on bets now. Now, since crypto cannot create money out of thin air, it's still a player versus player game. And so if you follow the insiders, if you follow the people that traded well in the past, we have an edge. For example, over here, we've got 33 wallets that we track by the Crypto Banter group. They've got 1.16 million subscribers on YouTube. Or we are tracking 12 wallets by Alex Becker. He's got 1.6 million subscribers. Or check this out, Brian Young. We have 5 of his wallets and he's got 2 million subscribers. So there are two components to this. First, those influencers tend to get information relatively fast. They tend to beat the market. But secondly, they might also have an impact on the market. So when somebody with 2 million subscribers talks about a small cap cryptocurrency, of course, some of the followers will buy the token, which then pushes up the price. And so with all of those wallets that we are tracking, we get various signals. Who's buying and selling what at what point in time. And while it's nice that the market is expanding, it's still a winner takes most market. So returns are very much concentrated in just a few assets. There are mostly losers in this market and a few winners that take it all. Just have a look at the top 100 cryptocurrencies in the last year, right? There are some tokens that perform phenomenally and a lot of them that are just losing. So just diversifying does make sense. If we just build a portfolio of many different altcoins and we don't trade actively, then we are underperforming Bitcoin because Bitcoin dominance continues to rise. Instead, what we need to do is we need to find ways to buy things such as virtual very early. And this is where we come back to Brian Young. We got a signal of Brian Young buying into the virtual token, and that was at 7 cents. So that was on the 21st of March of last year. Our community got excited and bought in. And of course, the rest is history, right? Now we are at $1.75. And so this is my strategy in this market. The market is expanding, people are making profit, but still returns are concentrated in a few winners. And we have to have a way to identify those winners. And we don't have to be the best at this, right? We just need to know who are the best and we have to find their wallets. And of course, this is not public information. And so we have to do on-chain analytics to find the wallets. And so of course there is the influencer trade channel with all of those signals, but there's also a tutorial course on how to find different wallets. So we use related trades, we use official NFT transactions, we try to figure out ways through deposit addresses on centralized exchanges, etc. to get new wallets that we then actively track with this automated bot in the channel. And since the community is learning how to find new wallets, we also have a dedicated wallet research channel. So this is then where our 500 members look for new signs for influencer wallets. And once the moderators have confirmed those wallets, they get added to our tracking. For example, here, right, we've got Crypto Gains that suddenly out of nowhere was talking about the Champ token. And of course, we knew about this because we saw the purchase alerts before in our tracking. And so by tracking the insider wallets, we become insiders as well. Not of course in the legal sense, because all the data on the blockchain is 100% official and transparent, but we do have an edge over other market participants because most people don't go through all of that effort. And so it's not necessarily just about buying one asset and finding the winner and holding it long term like virtual. It's also about shorter term trades. And so the community, of course, shares the winning trades as well over here. Just have a look. If you add some leverage to the game, you can make quite nice gains in a short period of time as well. So feel free to check it out. It's currently $125 US per month. If your crypto portfolio is not just $500, but rather 5,000, then it's probably going to be worth it for you, especially in this current market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.